You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today, Wednesday, 9th day of October, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room. That is private, members only, and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the top of the page, there's a link. Click it, fill out the form, hit submit. And be honest on the form, because if you're not, it's going to be awkward for both of us. So, maybe you took the trial a long time ago, okay? Send us an email, support@cfrn.net, and say, hey, I was brand new to trading. I didn't really understand what was going on, but now it's been a year and I've wasted 20 grand in these other places, and you guys really stand out in my memory. I'm writing my own PR piece here. Could I please have another free trial? Okay. Now, the rules we established many years ago is everybody gets 2 free trials, but they have to be 6 months apart. Are we flexible on that? We can be, for the right person. So, again, if you don't fill out the form honestly, we'll know, and you won't get a free trial. But if you communicate with us, we can work things out. Okay? All right. That's 2 hours every trading day. But here's the deal. When you sign up for the trial, you get a lot more than just those 2 hours in the live training room every day. CFRN runs 24/7, 365 since 2005. That's a lot of time, right? True story. And we actually have members in our audience and members who have been with us since 2005. I was just thinking about that yesterday. 19 years. Now, on the 28-year anniversary, we would love to give you all a gold watch, but at the price of gold today, yeah, maybe we'll send you a happy face sticker or something. I don't know. But thank you. Thank you for being a part of our family for almost 2 decades. It's amazing. When we broke the airwaves in 2005, we didn't really know what was going to happen. Yeah, well, now we do. And here we are. And a big thumbs up to the National Bank of Bahrain. I'm not going to get into that story today, but you can always Google it. Thanks. Oh, and Google, we're going to talk about Google here in a few minutes. Okay. Let's just dive in. The morning broadcast, as I said, that's private, members only, those on the trial. This broadcast, the afternoon broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. 2 different ways you can join this afternoon broadcast live. Now, we give you the best way first. You only got to do it once. Go to mytradingiq.com. But this time, scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What'll happen going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you'd still like to join live. Pigs wish they could fly too, right? No, I'm kidding. We have a solution for that. And there'll be days that you're busy, can't join live, but you want to get caught up later. I bring you our YouTube channel, youtube.com/CFRN. Very easy to remember, because you already know the YouTube part. So you only have to remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting. That means when you broadcast in 2 places at the same time, just in case you didn't know. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, but pick some days at random. See how we've evolved over the years. Now, I will tell you this. The last time I checked, you could go back 8 years. There's 1 million plus teachable moments. So, again, while you're never going to watch them all, nor does anyone expect you to, you're going to have access to probably the most comprehensive library free on the internet for those who want to learn how to trade. Okay? So, it's there for you. You want to take advantage of it. Our daily schedule, every afternoon, we start with our devotional, word of prayer, some news, both global and market, a recap of the alerts, both logic and concierge. Then about 50 minutes into the broadcast, Michael joins us, gives us a recap of what happened in the live training room this morning. Then we do some live trading on the TradingView platform for about 30 minutes. And then we wrap it all up with our good word for the day. So, better get started. Gorka, if you emailed Valerie, support@cfrn.net, she will respond to your email. That is her job. So apparently, you sent an email to CFNR support. So I'm not surprised that she didn't get it. And the original email that she sent you has all the links. So why don't you try emailing her at support@cfrn.net. and she will respond. Okay, well, if that's the one you used, she'll respond. Okay, let's get on with the program here. We're beginning a new topic. The last 7 days, it's been divine direction. We're starting a new topic today. What is my purpose? Learning to love God and love others. Okay. Our scripture today, Ephesians 2, verses 7 through 10. Now God has us where He wants us, with all the time in this world and the next, to shower grace and kindness upon us in Christ Jesus. Saving is all His idea and all His work. All we do is trust Him enough to let Him do it. It's God's gift from start to finish. We don't play the major role. If we did, we'd probably go around bragging that we'd done the whole thing. No, we neither make nor save ourselves. God does both the making and the saving. He creates each of us by Christ Jesus to join Him in the work He does, the good work He has gotten ready for us to do. Work we had better be doing. That's Ephesians 2, verses 7 through 10 from the Message translation. Now, we'll be on this topic for the next 7 days. What is my purpose? Learning to love God and love others. Up front, purpose and identity. Our purpose flows naturally out of our identity. So as we begin this devotional, allow these 3 questions to help you prayerfully and mindfully reflect. If you got a pen, you might want to jot them down, because each of the 7 days will center around these 3 things. Who does God say I am? Second question, who has God made me to be? Third question, what has God called me to do? So everything we talk about and discuss, all the scriptures we share over the next 6 days, because today's the first day. So it's all going to center around that. Who am I? Is a fair question we all ask of ourselves. Perhaps it is better to ask, who has God made me to be, and to whom has God called me to serve? You are valuable not because of your last name, your salary, your position at work, but because of Christ. First, in your baptismal identity as one redeemed by Christ crucified, and second, as co-workers with God in His economy of love. Practical application. Make a list of all the ways you identify yourself and how those identifiers shape how you live. How might your various identifiers inform how you live in the world? Now, what do I mean by identifiers? relationships, career, ability, ethnicity, gender, the experiences you've had in life. How might those various identifiers inform how you live in the world? How might you identify as God's handiwork, created in Christ Jesus to do good works, shape your purpose in life? Now, prayerfully consider how your identity in Christ might soak into all other parts of your identity. Talk to God about how you might live by faith at home, work, and community. Now, before we pray, I just want to talk for just a second. We talked about these various identifiers and who you are in the world as far as your salary, your position, But what we're talking about here is your relationship to God and how you can learn to love others. Now, I know nobody writes checks anymore, but they used to say if you want to find out where a man's heart really is, look at his checkbook. Where is he spending his treasure? Obviously, you could do the same thing with your financial statement today, or simply the statement from your bank. You can tell people anything. You can claim to be anybody. Where you spend your treasure, that's the truth. And we might all do well to take that look, because whatever money or resources or possessions that we have here on planet Earth in this lifetime, they don't belong to us. Every good gift comes from God. And you might say, no, this is my money. I worked hard for this money. Yeah? Who gave you the job? Well, my brother-in-law put in a good word for me. Wonder who convinced your brother-in-law to put in a good word for you, because he don't even like you. I mean, you can follow the chain as far as it goes, but it's always going to lead back to God. All good gifts come from God. So whatever money you have in your bank, whatever assets you possess, you're called simply to be a steward, because everything belongs to the one who created it, and that's God. Your very life belongs to God. Let's pray. Heavenly Father, we thank you for your grace, which has saved us through faith, not by our works, but as your gift. Help us to live as your workmanship, created in Christ Jesus, to do good works that you have prepared for us. Let our lives reflect your kindness, and may we walk in the purpose you've designed for us, showing the world the riches of your grace in all that we do. And Father, we pray for those affected by Hurricane Helene and now Milton. We pray that you comfort the brokenhearted, provide for those who have lost homes and livelihoods, and strengthen the weary. Surround them with your peace, and raise up helpers, bring relief and hope. May they know that you are close to the suffering, and that you will never leave or forsake them. And we cry out for those caught in the crossfire in the Middle East. Lord, protect the innocent, bring healing to the wounded, comfort those who mourn. We pray today for an end to this bloodshed and for your peace to reign. Turn the hearts of leaders and nations towards justice, mercy, and reconciliation. Let your light shine in the darkest places, bringing hope where all seems lost. And last, God, as this presidential election nears, pray for America. Grant wisdom and discernment to your people, especially conservative Christians, that they may be moved to vote and stand for values that honor you, life, liberty, and the pursuit of happiness. Remind us that our voice matters and that we must engage in this pivotal moment to protect the freedoms that make this nation great. Guide our nation in truth, and let us not lose sight of what is righteous and just in your eyes. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow up 368 points, almost 1%. The NASDAQ up 70 points. S&P 500 up 32 points. The Russell 2000 up 16 points. And for those who trade futures, which is a vast majority of our audience, S&P 500 Emini futures put in a new all-time historic high today, just before we ended the live training room. We'll be taking a look at the charts here in a few minutes and see what happens. You can ask yourself what typically happens when we put in a new all-time historic high, and we'll see what happens today by the end of the broadcast. In the commodity basket, crude oil down 20 cents, trading 73.37 last. Gold down $1.60, trading 26.3380 last. Silver up 19 cents, trading 30.79 last. In the Asian markets at the close, the Nikkei posted a gain of 340 points, almost 1%. The Shanghai dropped 230 points, and for the Shanghai, that's almost 7%. But again, the Shanghai was up 8% yesterday. So the Hang Seng fell 289 points, which is pretty close to 1.5%. And in the European markets at the close, FTSE up 53, the DAX up 188, which is almost 1%. The CAC gained 38. So we had a mixed day in Asia. It was a green day for the UK. And so far, it is a green Radio Wednesday here in the US of A. Let's take a look at some news. Hurricane Milton is set to make landfall in the Tampa Bay area this evening as a Category 3 storm with winds of 111 to 129 miles per hour. First major hurricane to hit the area in over 100 years. Now, in downtown Phoenix, as most of you know, my wife and I had an old historic church in downtown Phoenix for many years. We had a 70-mile-per-hour wind come through downtown Phoenix. I think they actually called it a cyclone. Anyway, it peeled the roof off that old church. Just days before, I had been sitting in that sanctuary, which was built in that particular sanctuary was built in 1938. And I mean, I could literally look up and see daylight. It was this amazing peaked roof. I've shown many of you pictures of it before. And I was praying, God, the guy that just came out quoted me 40 grand for a new roof. We don't have it. But this was way back in like 2004, maybe 2005. I said, God, we need a miracle. So when you pray for something, you may expect God to react in one way, like some benefactor is just going to hand you a check for 40 grand. I mean, that would probably make the most sense, right? God works in mysterious ways. He sent a 70-mile-per-hour wind, peeled the roof off, and our insurance company, Brotherhood Mutual, I think it was called. It's an insurance company that specializes in insuring churches. They flew a guy in with all kind of little gadgets and tools and whatnot, and when he came down from the roof, he said, I have good news. I go, really? He goes, you're covered. It took about a month because it was an old shake roof at a pitch so steep, they don't even try to build those anymore. That's why it was such an expensive job. And so God delivered. I had faith, I prayed, and honestly, I didn't care if it was somebody handing me a check for 40 grand or, I mean, it's a little unnerving to have the steeple and the roof peeled off. The steeple itself was hand-hammered copper. You don't find that too much anymore. But anyway, I said all that to say that when this storm hits, it's that 70-mile-an-hour wind ripped the roof off the church. But when Milton hits tonight in Tampa Bay, they're looking for 111 to 129 mile-per-hour winds. Pray for all the people there. Many have tried to get out. Some can't get out. I mean, I was listening to a newscast last night. Some people, young people, they could just jump in the car the first warning, and they can, get out of town. Or jump on a plane and get out of the country. But what about the elderly? What about people in hospitals? What about people in hospices, in nursing homes? What about prisoners in jail? How do you transport that many convicts safely at one time? What a daunting task. And then when it's all over and the dust settles, now comes the really hard part and the really expensive part. Rebuilding. People who have lost their homes, their livelihoods. Can you imagine starting your life from scratch at 60 years old? Or 70? Or even 80? Can you even imagine that? That's what these people are faced with. So if you're looking for something to pray for today, there you go. Get your mind off yourself. Pray for somebody else. The region's west-facing geographic location and typical weather patterns make direct hurricane landfalls less common, but not impossible. Prevailing east to west trade winds often push storms originating in the Gulf of Mexico westward. The shallow continental shelf off the coast up to 90 miles offshore with depths less than 300 feet create ideal conditions for large storm surges, essentially acting as a ramp, allowing the water to build up as it approaches the shore. The last major hurricane to directly hit the region was in 1921, when a Category 3 storm brought 110-mile-per-hour winds and an 11-foot storm surge that caused severe damage, costing roughly $180 million in 2024 dollars. Milton is expected to move across central Florida before entering the Atlantic Ocean. So hopefully it's not going to impact. North Carolina's got enough problems, and parts of Georgia and other areas. So if it just makes a swipe across Florida, yeah, that's terrible, but at least it's not, at this time, expected to move up the coast. A former New York City official was arrested yesterday and charged with witness tampering and destroying evidence tied to an ongoing federal probe surrounding Mayor Eric Adams and his administration. Mohammed Bahi, who served as a senior community affairs liaison and resigned Monday, is the latest person in a growing number of Adams administration officials who have resigned or either been fired, charged, or investigated. Bahi's federal charges stem from illegal contributions to Adams' 2021 mayoral campaign, as well as allegedly deleting an encrypted messaging app used to communicate with Adams and others hours before federal authorities searched Bahi's home. New York City's first deputy mayor, Sheena Wright, also resigned yesterday, following the resignation of her husband, schools chancellor David Banks, and her brother-in-law, deputy mayor for public safety, Phil Banks. The latest indictments come after Adams was indicted last month on charges including bribery and wire fraud. Adams has vowed to continue his term. If there was ever a definition of a hot mess, that would be New York City right now. Now, does the overcrowding still exist? The illegal immigrants problem still exist? Can ordinary people book hotel rooms? No, because they're filled with people who are in this country illegally, and the bill is being paid by your tax dollars. Some just doesn't seem right, does it? Well, the financial markets, they talked about a soft landing, a hard landing. Now they're talking about no landing. Now, I hate to say this, but I've said now for the last 2 years, they're talking about hopefully they could avoid a recession. And I've said, and I stand my ground today, if we get away with a recession, we should count ourselves very lucky. Because what I see on my radar is a full-blown recession. Now, some will say, oh no, we're America, we'll just print our way out of it. The Fed will fire up the printing presses and loan the American people more money. We can barely make the interest payments on the $35 trillion we're in debt right now. This is not a pretty picture. Soft landing. What a joke. Markets are on the brink once again, torn among 3 landing scenarios: soft, hard, or none at all. When the Federal Reserve cut short-term rates by a greater than expected 50 basis points in September, some concerns were raised that the Fed might seek risks the public could not. keep in mind, we're going to get the Fed minutes today. Now, a lot has happened since the Fed announcement in September, where we got that 50 basis point cut, larger than expected. Last Friday's jobs report beat expectations on the headline payrolls number by over 100,000. Of course, that'll be adjusted later, putting the specter of reinflation and tightening policy back into investors' minds. As Josh Schaefer wrote Monday, the "is good news discussion, well, it's back. In a recent conversation on stocks in translation, the episode airs October 10th. Hennon and Walsh President and Chief Investment Officer Kevin Mann responded to the question of whether the risk of no landing is back on the table. He said, "I think it is, until we find out more from the Federal Reserve." Now, those minutes from the last meeting today, the landscape has changed. So while those meetings or the minutes may impact the markets and we may see some volatility, it's a different world today than it was just a couple weeks ago. Mann said, "I think it is, until we find out more from the Federal Reserve," adding a nod to the upcoming U.S. presidential vote in November. Got the big election coming, and we don't know the outcome of that election. However, there are some out there where soft landing optimism still lingers, though it's now tempered with these fresh no landing warnings. And nary a hard landing worry seems to be found as stocks surge. As I said, S&P 500 Emini, new all-time historic high today. The CNN Fear and Greed Index is currently flashing greed, with an elevated reading of 72, not far from the threshold for extreme greed triggered at 75. That right there is a very reliable indicator that a crash is but around the corner. Now, this arguably reflects optimism, but it is also raising a contrarian cautionary flags that markets are underestimating risk. Despite the bullish sentiment, other signals suggest fading bullish tailwinds ahead. This Friday, JP Morgan and the big banks unofficially kick off earnings season. While expectations are solidly bullish as to the results, stock buybacks are largely paused, cutting off a key liquidity source. Meanwhile, bond yields have surged, with the U.S. Treasury curve leaning towards inversion once again, after only recently climbing out of a historic 2-year inversion. Google in the news. We talked about this a little yesterday. U.S. Justice Department said in a new court filing that it may recommend a breakup of Google as an antidote to unhealthy competition in the search engine market, showing just how far Washington is willing to go to rein in big tech. DOJ lawyers used a 32-page document to outline a framework of options for District Court Judge Amit Mehta to consider, including behavioral and structural remedies that would prevent Google from using products such as Chrome, Play, and Android to take advantage of Google search. Google, in a blog post, said that the DOJ's radical and sweeping proposals risk hurting consumers, businesses, and developers. The stock of Google's parent, Alphabet, fell more than 1% today in early trading. It's now down over 2%. Mortgage refinancing. Fewer homeowners are refinancing their mortgages, and purchase activity is essentially flat after mortgage rates rose sharply last week. Applications to refinance a mortgage fell 9% through Friday compared to a week earlier. Changing expectations sent Treasury yields and mortgage rates sharply higher. The average 30-year mortgage rate was around 6.62% on Monday, up nearly half a percentage point in a single week, according to Mortgage News Daily. Now, some will say, well, that a half a percentage point, that's not very much. Amortize it out over 30 years. Yeah, it's a lot. Boeing risk being downgraded not to sell, but to junk. You can Google and get more details on that. Social Security. Cherie Myers, an 82-year-old resident of Pensacola City, Florida, says the Social Security cost of living increase she'll receive in January won't make a dent in helping her meet her day-to-day expenses. Inflation has eaten up my savings, she said. I don't have anything to fall back on. The cushion is gone. So even with the anticipated increase, she's looking for work to supplement her retirement income, which consists of a small pension and her Social Security benefits. Guys, this is a problem. This is an epidemic. Now, we do have one presidential candidate who said that he would no longer make you pay tax on your Social Security benefits. I mean, if that was the only thing he stood on, other than the rest of the economy and the border and so many other things, I mean, those on Social Security constitute a very large portion of the voting bloc. And apparently the current administration is doing everything possible to keep people in North Carolina from even getting to the voting booth. Doesn't seem fair, does it? No, nobody ever said life was going to be fair, did they? All right, Michael will be here in a minute. Let's get moving, see what we can get done. Logic 247. We're in week 323. And over the last 323 weeks, we have issued over 17,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, think about it. Many of you were around when we rolled out Logic 247 323 weeks ago. And here we are at almost 18,000 individual alerts, averaging 20% or less. Since the market opened Sunday night at 6 p.m. Eastern, and Valerie did the recap this morning at 6:30 a.m. Eastern, we had issued a total of 15 alerts, which is a very light week, especially with 6 still waiting, 9 actionable alerts. So far, nothing stopped out. 0%. But it's early in the week, and I did a few alerts this morning, so she will update the recap this afternoon, as she does each and every day, and each and every one of you will have access to it if you're a member or on a trial. Now, we did this yesterday. We'll do it again today, just for the benefit of those who are tuning in that don't understand the logic alerts and how they work. Last week, we had a total of 43 alerts. A typical week is 50 to 100 alerts. 7 never triggered, 36 actionable alerts, 4 stopped out, 11%. Okay. So that was a good week, very good week. Now this week, these are going to have, from the time that Valerie did the recap this morning at 6:30 a.m. Eastern, but we know that the ES has put in a new all-time historic high. So this is going to be resolved. 58.30. We cracked 58.30, so later today this will be marked with a thumbs up. Probably the same for the Dow, probably the same for the Russell. B means buy. T means initial target. PR means potential resistance, or target number 2. And then the final trade to target, the weekly trading zone. This is a short. S means sell. This is the initial target. From $73.10 to $73, that's enough to get your goal for the day. And then the second target was down at $72.70. And then the next target was down at $72.60. And then the next target was down at $72.35. Have all those been achieved? The answer is yes. At the time Valerie did the recap, we had dropped to $72.70, but we've gone on now to make it all the way to $72.45. Okay. Every time the price of crude moves $1, that's worth $1,000 per contract traded. Long on gold, initial target, second target, potential resistance, weekly trading zone, final trade to target. Silver. B is buy, initial target, potential resistance, target number 2, target number 3, final trade to target. That was all Sunday night. And then here comes Monday. Short on the ES, short on the Dow. Thumbs up means everything worked out. We hit our target. Long on the Russell, short on the Russell. See, when the market can go either way, you may get a long, you may get a short, which is a hedge. And sometimes they both work out. Short on silver here. All alerts remain valid opportunities until triggered. Short on the Russell from yesterday. And then these are all the ones that were put out today. And I know that some of them have already triggered and ran to their target. Okay. Now, when you become a member, see what number are we on right now? When you become a member or trial member, you can look at all 17,997 alerts. When this week finishes, it becomes part of the public domain. Anybody can look at it. We're an open book. We're as transparent as we can possibly be. Michael's spreadsheet goes back 10 years. Doesn't get much simpler than that. Now, here's the catch. The purpose of the logic alerts is not for you to trade so you don't have to learn how to trade. And I know some people make that mistake. Okay? But there'll come a day when you wish you had taken the opportunity to learn how to trade. There's a million places out there that will take your money. But show me one that will actually teach you how to trade. I'd love to invite them onto this show as a guest. Have a conversation with them. Have them show us their numbers. See, everything we do is live in real time. Every trade in the live training room is in real time. Every logic alert is sent out well ahead of it actually triggering. Concierge trade alerts, again, go out well before those targets go out well before being hit. You can't be any more transparent than that. It's just not humanly possible. If it was, we would. Now, long before we had the logic alerts, we had the concierge trade alerts. Logic alerts come out around the clock, 2 a.m., 2 p.m., because futures trade around the clock and we have traders around the globe. If you're a member or trial member, read this information. Make sure you understand it. If you don't ask questions, it's extremely important. Otherwise, this part's not going to make sense. Okay? I screwed up the ES last night. For those of you using DT Pro, you've probably noticed that every now and then, it seems to be happening more frequently, one of your charts will hang up. The other charts will be updating tick by tick by tick, but one of your charts just stops updating for whatever reason. And that happened to me last night on the ES. So when we go through them, the ES won't count, but all of our members and all of our trial members had all of these numbers last night at 6 p.m. Eastern. That's when the Wednesday session began. Every one of the markets that we follow. Okay? All right, let's go look at that new all-time historic high. Michael should be here in just a second, but that's okay. When he's done, I'll come back and I'll finish the recap. Okay, S&P E-mini futures daily chart. This was the all-time historic high at 58.30. Now we're at 58.40. That's the high of today. So we took out the all-time historic high by 10 points, but now look where we've pulled back to. And this is what I was talking about in the live training room this morning at the beginning of the broadcast. What typically happens when you put in a new all-time historic high like we did here? Boop. Now these weren't all-time historic highs here, but we put in this all-time historic high, and what happened? Boop. Price came right back to where? The BBC. Price always reverts to the mean. BBC stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Higher prices, lower prices, higher prices. It's pretty simple, right? So we've got a new all-time historic high, but what'll be really interesting is to see, especially after the Fed minutes come out today. Not that they're going to mean that much, because the landscape of the world and the markets has changed since the FOMC meeting. Do we drop back to the 62% fib extension and trade through red and falling in the step line and hit the BBC? Or do we continue higher? Remember, you've got analysts and institutional traders out there betting on a soft landing, hard landing, or no landing. And that no landing takes you into the world of a depression. Now, I don't say that with any joy or pride, because I got to live through it just like you. God help us all. Now, why is the daily chart important? Whatever you trade, whether it's the S&P futures or some other futures, stocks, crypto, Forex, ETF, whatever it is, okay? Institutional traders, the ones with huge accounts who trade in extreme size, they're the ones that actually move price. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Because of their account size. They can handle a much deeper drawdown than you or I. They can stay in a profitable position far longer than you or I. So, every day for 2 minutes, take a free look over the shoulder of the deep pockets and see what they're doing. Had you done that this morning? Well, see, our indicators, our strategy, they're not designed to outsmart the institutions with their infinite resources. However, they're designed to help you see and to put in context with the use of multiple time frames what the institutional traders are doing. And if you simply do what they're doing long enough to get your goal for the day, and then have the discipline to put the mouse away, guess what? Life can become simple. Trading's not easy, but it can be simple. Michael, do you see this here? Hey, Michael.
Oh, sorry, my mic was off. Yes, I do see that. Yes.
Okay, so this was the previous all-time historic high at 58.30, and we made it all the way up to 58.40. So we got a new all-time high by 10 points, but look where we're at now. We're back to 58. We're back below the previous all-time, or right at. We're 58.27 half.
Yep.
And our discussion in the room this morning is, once we broke that high, would we keep running? And we did for a little bit. But I just shared some, I don't know, I guess pretty depressing financial news articles. When the minutes come out today, it's a different world than when the FOMC had their meeting back in September.
Right.
The hurricanes, I mean, so many things. And we've had like the jobs report, which was so rosy. We've had some other economic reports. And the thought of there being another half-point cut is like totally off the table. Maybe we don't even get a quarter cut. I mean, so while the Fed minutes this afternoon of the last meeting may create some volatility, it won't be, it's a different scenario because the physical landscape of the world has changed and the financial landscape has changed, the economic landscape. So we'll see what happens. Let me pass it off to you. Michael's going to give us a recap.
Before you do, I just want to.
I can put that back up.
Okay. I'll show it on my chart too. It doesn't really matter. But
here it is.
Where did it get up to? 58.41. And what is that? 58.41?
I've got the high of the day at 58.40.
Well, 58.40, 58.41 is a weekly trading zone. You don't have my chart right there.
Yes, it does. Yeah, I'd have to go to my 30-minute chart.
Yeah, that's it. I was just looking at that on my 30-minute chart. To the tick.
Yep, it hit the zone of the tick. How about that?
Yep. Imagine that.
Now, guys, these zones, and I haven't got into this part of my spiel, but these zones are published Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. When price drops to a zone, we expect support until proven otherwise. This was extremely bullish. Typically, when that happens, we'll pull back to the zone and then continue. This time, we didn't do the pullback, but we found resistance, bang, right at the zone. And we don't have crystal balls. So, anyway.
Right at the zone.
Math works. Okay.
It does. Over and over.
Over and over. All right, buddy.
All right. I'll take it over here. Let me do that right now.
And guys, when Michael is finished with the recap and with the live trading, I will complete the recap I was just getting started with.
Okay. All right. So you should be looking at my charts right now.
Yes, sir.
I know I have my one DT Pro chart up here right now, but that was one I was looking at when it went up and hit the zone right there.
No, it looks good.
Because this morning, this is what I was saying it was going to do. It was going to get up here a little bit through the midpoint between these two weekly trading zones. And it popped through the midpoint, right up, tapped the zone above, and now it's pulling back down to the midpoint. That's where it's at right now, right at the midpoint between two weekly trading zones. And that might not be important to everyone, but it is something that you usually access either support or resistance, depending what level you come at it from.
Yep. True story.
All right.
It's all yours.
Here we go. Good afternoon, everyone. Today is Wednesday, the 9th day of October. Wow. October 9th already. Gosh, that means Halloween is right around the corner. All right, anyway, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. It says sign up for your free 5-day training now, 9:15 to 11:30. Click on that. There is no credit card required for this trial. When you click on that, you're going to be brought to this page, registration page. All we ask for here is first name, last name, email, phone number. There are 5 multiple choice questions. If you have NinjaTrader and you want to use Ninja charts, then give us your machine ID. All right, if you have NinjaTrader just to trade with, then we don't need your machine ID. But if you're using Ninja charts, then we do need it. If you have TradingView, then give us your login ID. If you do not have TradingView, it would behoove you to go and take the free trial with TradingView. All right, you're gonna have to sign up for real-time data. You're gonna have to pay $7 for the real-time data. None of that goes to us, but take the free trial with TradingView to get your indicators, the indicators that we have on TradingView indicating on your charts. Okay, it's really simple. intuitive charting platform once you figure out the little things you got to do, like left mouse drags and all that kind of stuff. Anyway, hit the register button and you'll be sent everything you need to get into the room in the morning. All right. Now the spreadsheet. We had okay day today. It was better than yesterday. Better than the day before yesterday. The first day of the month was our best day all year. I think in 2 years. So we're probably not going to beat that one. But today, if you're going to read the spreadsheet, you got to read all CFTC risk disclosures at the bottom. I don't know if I said that already, but I have to say that. Today is the 9th day of October 2024. We're -4 on the NQ, plus 20 on the Russell, plus 10 on the YM, and plus 27 on the ES. That put us at 467.5 on the morning session. Today it took 5 minutes and 2 trades. Excuse me, 5 minutes and 2 trades to get to $1,200 this morning, and we took a total of 15 trades. So on the month now we're at $6,602. Now we are not anywhere near halfway through the month yet, right? We don't have any holidays. 1, 2, 10, 14 days. So we're a third of the way through the month right now, and we're at $6,600. So this could, if we continue in this, well, if we continue with this average daily, then by the end of the month, we'll easily have a new monthly high. But we have 14 days left to make another 10 grand. It could happen. It could easily happen. Anyway, we're at $6,600 on the month, averaging $943 per day. On the year, we're at $92,740, averaging $488 per day. Now, if you were to add 1 contract per month, well, quit trading when you get your goal for the day, and add 1 contract per month. So far this year, you would have only had to work 54.71 hours, and you would have averaged $2,662 per hour on the year. If you followed the 24/20 blueprint all the way through like I did, you would have averaged $7,521 per hour by the end of August this year. All right, so let's get into the actual trades. Okay, now we had, well, we didn't have a ton of trades, but we had some trades. See this right here? 100 range NQ just crossed below the -85. That's what that's saying. So what that suggests is that the NQ prices are going to be going up soon. Now, is it a valid trade? I don't know, but if we go to 100 range NQ, the ribbon is spread. So we crossed below there. That suggests that we're going to have a move up in price on the NQ. Okay, so when you get that little alert down here, Graham, that was something that we didn't really go over too much, was the alerts and all that stuff. You can create alerts that will trigger like that, letting you know when a trade is coming up ahead of time based on what the trigger is doing. Okay, and you can have that sent to your phone, or you can have it sent to your email. You can have it sent to your phone. You just have to make a noise on your computer if you want to, all that sort of stuff. Okay. And Gorka, I did look to see if I could find the Telegram information I was looking for that Valerie usually sends out. I will have her send that out. Or, oh, okay, good. And maybe she could stick them in the boardroom too. Yeah, good. That's all good. All right. So where was I? This is on 100 rand. I want to go back to 31 range. The trades that we actually took. Let's get here on the YM. Okay, on the YM, we started out right here. The break even on that one, and then another break even on that one, and then a plus 10 on that one. All right. So this was during the last half hour of the room this morning. I didn't really notice all this. It didn't give us anything here. It didn't come out of the oversold, so we didn't have anything through there. It did give one trade right here that was going right into the zone. Now, from everything that we said this morning, you would fully anticipate this getting up above the prior swing high, right? But we were at all-time highs on the ES at this point. It's not surprising that the YM went down when the ES got rejected. And I think it got rejected right about the same time, right? But this is the leg length you'd be looking to get, and that just wasn't happening. Not right there, not right then. There is a trade triggering right now on the YM though. And if we go back to the stuff that we looked at this morning, let's look at it. Yes, that is right. And I'll go check the time on that too to make sure that they're just about the same time. But what I wanted to show is just this little snapshot of information right here. You see, this is the leg up, and leg lengths was part of today's lesson plan. So this is the leg up, and this is 50% retracement of the leg down. I'm sorry, the 50% retracement of the leg up. So is this going to show any strength right here? I don't know. I mean, it's a valid trade right here. It's a valid trade right here. Now, the stop should have gone to break even already on that, I believe. If your entry was here at 705, it ran down to 695. So yes, your stop should have gone to break even already on that if you got into the trade. What do you expect out of it? The most I would expect out of this would be the swing low, right? But probably not even that. Why? Because we're in an uptrend. That's pretty much it. We're in a bigger uptrend right here. And what you've done right here is a 50% retracement of this move up, right? From here up to here. If I draw, let me see, I can draw with this. I can draw with this. Draw with this. Here we go. From here up to here, 50% is right there. And that's what we've retraced. So what do you expect? Based on the stuff we went over this morning, you expect that right there, right? What do you expect that from? Right here. What is it going to put you? Up here. Right? That's what you expect. Now, for those of you guys who don't know, who've never heard me talk about the diamond principle or anything like that, the diamond principle would suggest that we're going to get up to this level right here, somewhere way over here, the way this is dragging out. So it'd be right around the time that I finish this session right now, right? It's around 1:30 is what the diamond principle is suggesting that it's going to do. And if it does do that, it would suggest that it's going to happen. How many bars is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. 28. We'll start here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. So it's right about where I picked. Okay, right about there. And this is the level that it would have to go up above. This is about the time that it should get there and exceed that. Now that you have that information, what it suggests is this, that when it does exceed it, if it does exceed it, it has to exceed it for the rest of this to be meaningful. But when and if it does exceed it, as long as this stays the low right here, when and if it does exceed it at roughly a point in time, it would go that much further, which would put it right up here at the weekly trading zone above, which again, the symmetry that we were talking about this morning, it's happening again. And that amount of time right there would be, well, it would be over here somewhere. It should do that over here somewhere. It should hit that weekly trading zone, roughly. Okay. That's kind of the trajectory right there. You see that? But that's based on the stuff that we did this morning. Now, that was a lot of information, I know, to throw at y'all at once, but that's why it's not a one-day mentoring program. Anyway, so on the YM, we ended with +10. Okay, on the Russell, now look at the Russell, and we'll see what that's done. This is where we thought it was going to get to this morning. All right, I didn't think it was going to go straight up there. I thought we would get a pullback. Look at what's happened right here. The same thing. Look at the timing on this. This was at 11:46, 11:46 to 11:52. Let's go back here. Timing on this was 11:51. So that was 11:46 to 11:52, 11:51, 52, 11:51, 52. And when did the ES top out? I'm going to guess right there, 11:50, 11:54, right there. They all topped out at the same spot. The NQ, when did that top out? Right here at 11:55. So you see, it all happened at the same place. Now, let's go back here. The same thing that I just told you back there, and the same thing that happened here earlier, for those of you guys that were in the room this morning, this whole thing right here, when I crunched it up, and I said, this was 50% retracement of this leg up that was from back here. Well, now we have a shorter leg up that's showing weakness in trend, right? From this morning, that's showing weakness in trend, right? That shorter leg up right there. And the leg that it has done Let's see, we should be at about 50% right now at the leg that it has done. We are. 50% is right here at the leg that it has done. So what does that suggest? Should you look for strength or weakness in the trend right here? I mean, I know the trend has changed to down, but should you look for strength or weakness in the downtrend? I myself would be looking for weakness right here. Okay, I'd be looking for this to continue the trend up, to finish the leg up here. Now, if it does not that, then after this pullback, you will look for strength on the downside if it gets below this level. All right, if it gets below that level. But you see it's doing the same exact thing. All the markets are doing this. Well, I don't know about the rest of them, but I know these two markets are doing the same thing. Doing the retracement off of the high, all at the same point. Same point in time. The ES is doing the same thing. We just look at the ES and we use this as our leg. Excuse me. We use this as our leg right here. All right here up to there. And we'll do a 50% retracement of that leg, and we have just hit it, I believe. There it is, 50% retracement of that leg is right there. And if you go down even further, if you want to use the bottom of this right here, I believe we still hit that. Just about, yeah, we hit the 50% retracement of that too. So they're all at a point right now where they should go up, where they should move up. All right, and where should they move? If you use this leg length, then this should move up to there. All right, if you use that leg length. And if you use the other leg length, that's the one down below it, which was right here, right? Is that right? Yeah, if you use this leg length down here, now this is the one we drew this morning that was going to put us right into the weekly trading zone. And that worked out perfectly, right to the weekly trading zone this morning. Do you remember me saying that this morning? I said it put us right at the weekly trading zone. And I was talking about the symmetry this week. If you stretch out a little bit like that, and you go from a deeper deeper swing lower, deep pivot, and you grab that, that's going to put us where? Probably at the midpoint between these two zones here, pretty close to the midpoint. No, I guess the midpoint's way up there. Okay, well, it's going to put us up here. Again, all highs, all-time highs. So would you look for weakness here or look for strength? I would look for strength. If we close up above here and it flips this ribbon back up, I would look for all-time highs up above that weekly trading zone. That's what I'd be looking for by the end of the day. Okay, so the trades that we did take here on the ES this morning, we had some really nice trades. We had one stop out, but we had some really nice trades. I didn't make any mistakes on the ES today, but our one stop out was right here. We're at -10 on that one. Then we picked up 9 ticks on that one to get to -1. I should let that one run a little longer. On this one, we picked up 13 ticks, 14 ticks to get us to, 13 ticks to get us to +12. We had a break even there, and then we got 15 ticks on that one to get us to +27. And that was where we signed off for the morning. Now, we did not commodity oversold anywhere else during the morning session. And then during the noon session, we didn't commodity oversold until right here. Now, this right here would have been enough to get your stop to break even, maybe take a little bit of profit. When it did not go up to the prior swing high, this was showing weakness right here. Okay, when it did not go up to the prior swing high, so now you have lower highs, you have lower lows. So right here, it was showing a little bit of strength on the downside. You didn't get a trade set up there because it didn't commodity overbought. Over here, where it did commodity overbought, the ribbon was all crunched up, so you didn't have anything all through there. It moved all the way down here, came up, it gave you this. You may have had a trade set up right there, which would have been just enough to keep you in it. Your stop would have been, if you got your entry right here at 27.75, your stop would have been 29.75, 30.25, 30.25 is where your stop would have been. And the high of this was 29.50. So you would have been able to stay in that for the move down. Did not put in a lower swing. This is showing strength on the upside to me. We got a higher swing right there, so we have higher highs and higher lows. And we just came out of the oversold. Now, if we put this on a larger time frame, I know that's kind of tough to consider, but look at it here on a larger time frame. Okay, even larger time frame. Everything's looking pretty bullish. The 100 range on the ES just doesn't work, but the 19 looks pretty good. And the 20, The 27 works pretty good. The 31 works pretty good. But this is pretty bullish right here. The way it's looking right now, it's pretty bullish, and it should get up above the prior swing high, right? And so using the diamond principle, what I said a few minutes ago, I think I drew it on the DT Pro charts, right? So using the diamond principle, the same on a larger time frame using a range bar. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7. So that's going to put it right here at 1317, where it'll hit this level. This level right in here, 1317 is where it should hit that level. So that would make the next level up from there, where it's going to hit this up here, where I drew that before. It's going to make that let me extend it out. Well, here I'll draw it, and that'll be the easiest way to do it. If this does happen in this time frame, it could happen sooner, but if it does happen in this time frame, then you're looking at this time right here for it to hit this level, right up here. All right, and that works out to 1336 right here when I'm doing it on this larger time frame. When I did it on the smaller time frame, it worked out to 1329. So there's no time element associated with range bars, but you can see when you break it down using the diamond principle, it all comes together pretty well. Now, what market did I do that on when I did that a few minutes ago? Oops, I didn't do that. Do you guys remember what market I did that on when I did it a few minutes ago? Was it the YM? Was it the ES or the Russell? I know I did it on a market a few minutes ago, and I may have done it on, yeah, I think I did it on the DT Pro chart. Let me go see that one. Here it is. No, I didn't do it on this chart. I don't know. I don't remember, but I remember saying that earlier. Anyway, that's the way things look right now. Okay, so we'll see how things work out as far as getting up to those levels in the larger time frame. Did I go over the individual trades? I think I did on the ES. I did. All right, so I didn't have that much on the NQ today. It's odd that we have more trades on the ES than we do on the NQ, but today is one of those days. And look, our NQ trade, just like yesterday, the last trade on the NQ yesterday was a stop out. Same thing today. And the NQ being our big winner almost all the time. This has been kind of a weird week. All right, so our first trade on the NQ was right here. We picked up 24 ticks. That's where we got the goal for the day on this very first trade right here. 24 ticks on that one. Then we didn't trade it again until all the way over here. And we picked up another 8 ticks to get us to 34. And then we had one break-even trade right here, and then we stopped out on that one. Stopped out to the tick on that one. And then it ran up. So after that, we had -4. During the break, there was a trade here. Yeah, right here, there was a trade, put in a higher swing. Right here, there was a trade, put in a higher swing. Right here, there was a trade, put in a higher swing. And all the way over here. I wouldn't have done that going into the zone. If I had enough to get the stop to break even, had you taken it. Then it flipped around and it started going down. This, I think if you spread that out, you'll see there's 4 in there. That would have given you a trade there, enough to take some profit. I mean, from here to here is 30 ticks. So you had enough room to take some profit in there. And it didn't put in a lower swing until all the way over here. But then it pulled back up, and look, this is the easy and obvious trade. Like every one of these right here, easy and obvious trade. You can see all 4 lines in the ribbon. You're coming off a higher swing. You're in a trend. It's easy to see these trades. Right here, another one. Any one of those trades would have gotten you the goal for the day. Any one. All right, and then through here you didn't have anything. Till right here you didn't see all 4 lines in the ribbon. Then over here it flips down. You do see all 4 lines in the ribbon. Right here, actually, this would have been the first one. You see all 4 lines in the ribbon right here. 92.25 and dropped down to 88.50. So that's not enough. You would have stopped out on that. You wouldn't have done that because you stopped out on that. You need a lower swing. So you'd be waiting right now for the long trade. And this would be perfect right here. So right here on the NQ, on the NQ, didn't mean to do that. On the NQ, I'm trying to drag it over so you can see it. Here it is. We want the up close on this. 404, that's going to put us up here at 12. Okay. 8 points above the bottom of the bar. And there we're in. It closed up, we're in. This is an easy and obvious trade to me. Is it going to go up? Well, it should. It should get up above the prior swing high. It should actually get all the way up here to the weekly trading zone. That's what it should do. And my stop should be 36 ticks away. It's off by 1 tick. And my target's at 48 ticks. So if it gets up to here, it's going to hit my goal. All right, it's going to hit my target if it gets up to there. So let it play out and see what it does. All right, for anybody that's watching on YouTube, if you have not taken a free trial with us, if you're just starting right now, starting to watch on YouTube, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. All right, there's no credit card required for the trial. Click on that purple button. That's going to bring you to this registration page. We're going to hit 4 ticks in profits. Got to hit 16 and a quarter, 16.50 here. Not 4 ticks, 4 points. Let's bump that stop to break even. I believe it's going to do it here in just a second. It's almost there. Anyway, if you haven't taken a free trial and you want to, all we ask for is your name, email, phone number, and there's 5 multiple choice questions right here. Just fill those out. And right here, if you have NinjaTrader and you plan to use NinjaTrader charts, then give us your machine ID. If you're not going to use the charts with our indicators on it, you can use the charts to trade. A lot of people do that. You don't need our indicators to trade on the charts. If you want to have our charts, what we have for NinjaTrader on your computer, then you need to give us your machine ID for NinjaTrader. All right. If you don't have TradingView, I want to encourage you to get TradingView. You can get that by going here to trading platforms and following these directions right here. Watch this video. It's 3 minutes long. All right. It'll be worth your 3 minutes. Let's go back here. Where was I? Oh, the registration form. Yes, I want to encourage you to get TradingView. If you don't have it, I want to encourage you to get TradingView. Okay. Because that's what our indicators are mainly based in right now. All right, hit register, and you sent everything you need to get into the room in the morning. Okay, so here's the trade that we're in right now. We fully anticipate it's going to get up above the prior swing. That's not the trade we're in. This is the trade we're in. We fully anticipate it's going to get up above the prior swing high, and further up here to the weekly trading zone probably. Okay, but we've accepted the risk. We are risking 36 ticks on this trade. And in the meantime, the Russell over here is at a weekly trading zone. It's at the ribbon overbought. So the Russell's got kind of a bearish look to it right now, but it's at a decision point. And you gotta go up just a little bit more there. Just one more. There it goes. Okay, stop to break even on this. All right, so now, Graham, you see how I moved the stop to break even like that? I actually put a separate order on there at break even. So that requires more margin. All right, that's not the best way to do it. It's the fastest way, but it's not the best way. Because if this stops out right now, if it comes down and gets me right here, all the other orders are still on. So I have to go and cancel them. Now, if I hit break even and I do this, then it brings that other stop up to break even. Okay. So now we only have 10 here and it got rid of that other one on me. Then I'm out of break even. But now I don't have any other orders on. You see how it's not highlighted up here? Nothing is highlighted. That means I don't have any orders working. Right? If anything up here is highlighted, then that means you have an order working. If you have something like that, I'm sorry. Yeah. If you have something like that on, then you have an order that's working. Okay. Even if you're not in the trade, that means you got an order waiting somewhere. So you want to make sure you clear out all the orders when you're out of a trade. Okay. Every time you exit a trade, there should be nothing highlighted up here. Nothing active. Okay. Just a little bit of information about the DOM. All right, so the ES didn't come out of the oversold quite yet, but it's kind of doing what I was hoping it was going to do. Now I was figuring down at 130 when we went to the, what were we on, the 31 range on this? Was it the 19 range? What did I have it on earlier when I drew those dots and stuff on there? Here it is right here. I think it was on the 19 range. Right, if it gets up to this level and exceeds this level sooner, then that means this level will probably move over to the left. Okay, if it gets up here and exceeds that level before this dot, then this becomes smaller and that moves over. All right, now it's part of the diamond principle, and what the diamond principle suggests is that this is what happens. Price pulls down like this, and it goes back up like this, and that establishes this level right here. It also establishes this timeline from here to here. So what price should do at that point is go this amount right here up to here, and it should do it in this amount of time. Okay, so that completes the diamond like that. Right, and if you extend that out this way, extend that out that way, that timeline is right there. That is it. So if I draw this down like that, then we have a parallelogram. The parallelogram principle. I'm just having too much fun with that. All right, minimize this. It is 1:26. I only have a few minutes left in here, so I don't know. I was thinking it was going to get up to there. No, it's got to exceed that. For this to become active, an expectation, a realistic expectation, it's got to exceed this level right here. Now, it might not do it in this time. It might do it sooner, but we'll just have to wait and see. You know, on the ES, on any range bar, there is no time element associated with the range bar. Okay, none. So now let's go back here and look at the YM really quick and see if it's doing. I mean, everything looks like it's beginning to do what I was thinking everything was going to do. See the pullback right here? I was telling you, it showed weakness right here, and I wouldn't expect it to continue the trend, and I would expect it to move up and show strength on the upside. That's what it's doing right now. It's showing strength on the upside. Okay, I guess this is where I drew that in. So the stuff that I drew earlier on this, it reached this level much sooner. So all this moves over to the left. Okay, this was the level I thought it was going to get up to, that we wanted to get up to satisfy the diamond principle. The same principle that I just drew over there, it's happening right here. I'll draw it again for you right here. This time I'll use this highlighter. Okay, so it went down, but the run back up to this level was much faster than I thought it was going to be. Okay, the run back up to that level was much faster than I thought it was. I thought it was going to happen over here, but it's happened there. So now this is your time element, and this is your price element. So we have the price element right. The price element is up to the zone. The time element is what's in question right now. So if we take this guy right here and we use this, our new time element, okay, then you're looking at right here, right there, for that run up. Okay, maybe even half that. It could be right here that it actually makes that run up. But what it's got to do now is a pull back down to here and then another push back up. Okay. So that is just the way that the markets work, over and over and over and over again. So go back here onto a smaller time frame, like this one, and we'll see what happens with it. Oops, not that one. This should be on 19. And we'll have to see. This is not hitting. It's not hitting this level yet. So it was in a little bit of a rush to get up there, it seemed like, but it hasn't done it. The YM did make the move up quick. The Russell's actually got a short right here. Excuse me, I had to sneeze. The Russell's actually got a short right here, and this is a valid short. Now, I wouldn't expect the short to get beyond this level right here. I mean, if you get into it, great. You got some profit in it right now. I'd be locking in some profit. I wouldn't expect it to get below this level. I would look for weakness in this, and I would look for it to turn around and start moving up. Okay. The NQ trade that we took over here, we ended up getting a break even on. It still hasn't put in a higher swing, so this is getting kind of weak right here, right now. Now we have the FOMC minutes coming up here in 30 minutes, so that's kind of a big deal, and I expect the markets are going to slow down as we get closer to that's exactly what's happening right now, it looks like. So I guess I'll take this moment to say that's going to be it for me. If you have not taken a free trial with us, go here to mytradingIQ.com and click on the purple button. There's no credit card required for the trial. Click on the purple button. It's going to bring you to this registration page. Fill it out, and we'll get you going. All right. If anybody wants to meet with me or has any questions with me, the best way to get a hold of me is to text me at 617-943-3298. Again, that's 617-943-3298. 3298. Okay. With that, I'm going to wrap it up, and I will see you all either later or tomorrow. Thank you all for coming today. Dwayne, it is all yours. Pass back up to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain's largest city park. Dwayne, if you are ready.
Yep.
There it is.
Check your tech email and go through those steps and make sure it works. And I'll be tied up for the next 30 minutes, so if you message me, just know that I'm going to be tied up on the broadcast for the next.
Okay.
You can still send me a message, whether everything worked fine or not, and
okay,
when
I
I'm
got
done,
the message right here.
I'll be in touch with you. I just won't be able to respond for the next 20, 30 minutes. Okay.
That's fine.
All right, guys.
All right.
Pick up where we left off. We were on the...
Wait, the recap of the recap.
Oh, yeah, I'm sorry. Recap of the morning session.
Yes, 5 minutes, 2 trades, $1,200.
Great job.
Thank you.
Okie doke. We were finishing up on the daily chart where we talked about we put in a new all-time historic high. We had a weekly trading zone that was sent out Monday morning at 6:15 a.m. Eastern at 58.40/41. That was one of the zones. So we spiked it. We got up to 58.40. Now pulled back to 58.33 and a quarter. We'll see where we end up. I was explaining to you that institutional traders look at daily, weekly, and monthly charts the way you and I get 30-minute charts, 5-minute charts, tick charts, and range charts. So it doesn't matter if you trade the S&P or some other futures or stocks or crypto or Forex or ETFs. Before you start your trading session, look at the daily chart of whatever you're about to trade. Look over the shoulder of the deep pockets. It's a free look. See what the deep pockets are doing. Because as long as you do what they're doing, long enough to get your goal for the day, you can simply put the mouse away. Build your account size over time. Follow the 24/20 blueprint. Add contracts when the blueprint tell you to add. You don't start trading live the second you become a member, because you haven't learned the strategy yet. Blueprint's going to direct you to put together 10 consecutive days in a row where you reach your goal, 10 trades or less. Only then should you even think about going live. And that's when the blueprint's going to give you the green light to go live with one contract. Now that you're trading real money, you're going to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add the second contract. Now, that's a huge deal because the first contract, you funded that with your startup capital, the money you used to open your account. But the second contract is added with profit you earned in the market. See the difference? Blueprint's going to tell you when it's time to add contract number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow that blueprint, which has served us well since the beginning, you shouldn't blow up another account. It's not impossible to blow up another account, but you're going to break some rules. You're going to do something you were told not to do. So, ball's in your court. It's time-tested, trader-proven, and it's waiting for you. You can dream of being a trader all your life. You can chase all these gimmicks and whatnot, you know. For $99, you'll never be stopped out again. You'll make $46,732.29 in your boxer shorts at the breakfast table every day. Really? If they can do that, then why do they even need your $99? Huh? Now you might say, well, okay, why do you guys want my money? Because we invest time in you. 2 hours of live training every day, to the one-on-one mentoring, to the members-only workshops every Thursday night, and the around-the-clock support. That's why. The laborer is worthy of his wages. And compared to all the nonsense out there, what we charge, gee, it's pretty nominal. So anyway, you'll do what you're going to do. It's your trading business or not. Because if you don't follow the rules, you're just going to blow up another account. And the whole idea is not to blow up account. Okay, let's get rolling. I already explained on the ES last night, DT Pro had hung up, and I moved these up out of the way. I didn't want to get rid of them because I got to recreate them again. But tonight, when I send out the CTAs, I can just drag it into place wherever I want it to be. I don't want to have to recreate it all over again. However, this is where the ES opened last night. Right here, this candle. And that's when the CTAs came out. Price dropped to the weekly zone. Price drops to a zone. We expect support till proven otherwise. This was an anomaly trading through the zone without a pullback to the zone. The market was trying to put in that new all-time historic high. Now the previous all-time historic high was 58.30. Monday morning, these zones were sent out to all of our members and all of our trial members via Telegram. This is the highest zone for the week. Now, we're not saying price is going to get there. We're just saying that come close of business on Friday, we don't expect price to be higher than that or lower than the lowest zone. When the market finds support, it's going to go find resistance. If it finds resistance, it's going to go find support. Price does not travel in a straight line. It travels in legs. Leg retracement. Leg retracement. Leg retracement. Leg retracement. Leg retracement. I don't care what time frame you go to. Go back to the daily. What do we got? Leg retracement. Leg retracement. Leg retracement. Now, the pullback to the BBC holds more often than not. But eventually, it's going to trade through it. So we trade through it. Leg retracement. Pullback hill. Okay? So, markets fractal in nature. The BBC can be applied to any market, any time frame, any stock, crypto, Forex, ETF, doesn't matter. Stands for bull, bear, cross. Price gets below the green line, we're bearish and expect lower prices. Price gets above the green line, we're bullish and expect higher prices. Leg retracement, leg retracement, leg retracement, leg retracement, leg retracement. Found support at blue and climbing. Now, this is really important, okay? We know we put in a new all-time historic high by 10 points, but I talked about this in the live training room this morning. The probability of price getting rejected once we break that all-time historic high, pretty good. See what happened, okay? We did catch a bounce off blue and climbing. Got a doji going on right now, just flash red. But what's important is this step line that led us up. Price, step line, blue and climbing. That's the perfect stack. Notice that the step line is crossing blue and climbing. When the step line crosses blue and climbing, see it's on the left side, the black line's on the left side of the blue line. Once that black line crosses over to the right side of the blue line, we expect price to retrace back to the BBC. Price always reverts to the mean. In our case, the mean is green. Call it the BBC. The other indicator, the CFMA1, I refer to it as blue and climbing, red and falling. One's bullish, the other bearish. Bullish, blue and climbing. Now, once a step line crosses and price starts dropping back to the BBC, what will probably happen is blue and climbing will roll over like it did here and become red and falling. And a great place for price to meet up with the daily BBC or the 30-minute BBC would be at this zone, 58.14/15. It may not pan out that way, but in a perfect world, that would be support times 2. That doesn't mean price can't continue dropping. There's a better chance of catching a bounce. If price drops to this zone, we expect support. If price drops to the BBC, we expect support. So if the support and the weekly zone are together, that's what I call support times 2. Try to make it as simple as possible. And again, ignore these CTAs because I've learned my lesson now. I will log off and log back onto DT Pro every night before I do the alerts, just to make sure everything's firing on all cylinders. Okay, let's get through the rest of these. Here's the Dow. Here's where we opened last night on this candle. Price ran up to the zone and found resistance. That's what we expect. We got below the BBC, so we expect lower prices. Now this low is this low from yesterday. My projection was that it would make it down to this low, but it didn't. However, there was still plenty of room. You only need 20 points. This candle opened at 42,305 and dropped to 42,263. That's like 2 days of getting your goal in that one candle, even though we didn't make it all the way to the short target. But hopefully you can see the red line on my cursor and understand that this low is this low. What was this low? 255. What was this low? 254. Okay. One tick off. All right. My apologies. I'll try to do better. We get above the BBC, red and falling turns to blue and climbing, so we get a leg, we get a retracement, the pullback holds, we get another leg and a retracement, the pullback holds, we get another leg and a retracement, and even though we spike it real good, okay, now this right here, this is the 9:30 Wall Street opening candle. This is why I personally choose not to trade the first 30 minutes. Volatility is necessary for trading, but it's got to be volatility I can manage. And for me, again, it's a personal preference. Michael hits the ground running at 6:30. Most traders, I think, hit the ground running at 6:30. and then, or at 9:30. I'm on West Coast, so it's 6:30 for me. Yeah, you guys, you have the life of luxury. You guys have banker's hours. You don't have to show up for work till 9:30. For me to show up at the open, I got to get up at 6:30. But hey, that's okay. It's the life I've chosen, right? Okay. So, the bell, ding ding, on Wall Street. Red candle all the way down. And then buyers come in and drive it all the way up to the zone at 42,530. What do we expect? Resistance. This is Wednesday. The vertical line separates today, Wednesday, from Tuesday, from Monday. On Monday, price dropped all the way to this zone. Found support. Then when we opened Tuesday night, this was, let's see, Wednesday, Tuesday, Monday, yeah. Following night, we opened, we dropped, and we spiked that zone a little bit, but look where we end up. And then where do we find resistance? At the zone. And then I just explained all this. We ripped right through the long target, hit this zone, found resistance. We spiked it, and we came all the way back down almost to that long target. And on this candle, it looks like we actually touched it, and blue and climbing. And that support sent us all the way up to the zone at 42,750. There's still 2 more zones overhead on the Dow. Because we've come off on the ES, there's actually 2. The one we already hit today, and the highest one. But see what's happening with this candle? We just talked about it. Okay, step line's crossing. May take another candle or 2, but once that black line is definitely on the right side of the blue line, that's your indication. Price is heading lower. This area is where we anticipate support. All right, covered everything on the YM. Now, what is this called? Consolidation. When price hits a weekly trading zone, 70% of the time you're going to get consolidation. It can look like this, it can look like this, it can look like this, it can look like this. 20% of the time you get rejection, and about 10% of the time you get the slice. That's when price slices through a zone like it's not even there. Under normal market conditions, what will happen is when that slice runs out of steam, this price will retrace back to the zone it sliced through and continue in the direction of the slice. Now, as we consolidate here at the weekly zone, look what's happening with the step line, black line. What's it doing? It's doing its best to cross to the right side of blue and climbing. So what will we expect then? Same as the ES. Now notice the 30-minute BBC is already at the zone. It's just waiting. Sitting there, arms open wide for price to drop. Now, is there a 100% guarantee that price is going to drop? No. And anybody that tells you there's a 100% guarantee of anything in the world of markets, keep your hand on your wallet. Somebody's more interested in your money than you are. Now, when you have a bearish cross like this, that's when the red line gets below the green line. First time price revisits that area will almost always be good resistance. Same's true of a bullish cross. Okay, but a bullish cross here didn't have much of an extended move, but when price came back to it, it was support. Okay, so as we consolidate sideways, the step line will cross, and then we'll look for the drop. Now, from a 30-minute perspective, that's a counter trend trade. On the 7-tick range chart, those are trend trades too, but based on a 7-tick range chart, which is very different. The 30-minute chart is my roadmap. That is where I'm able to take a big picture look at what's happening in the markets and know with a very high degree of certainty what the next high probability move is. And I'm telling you now, the next high probability move is for price to return to the BBC. And we expect it to hold. Pullback holds more often than it doesn't. And so we would expect a bounce. If, however, price trades through the BBC and the zone, which I kind of doubt, but it could happen. You got to embrace all possibilities. Then you can trade short down to this area right here, where this low is. You should expect that to be support. All right, let's get through these. Russell, here's where we opened last night. Down we go, right to the short target, end of the zone. We consolidated the zone, as we do 70% of the time. Red and falling turns to blue and climbing. Price gets above the BBC, and we get a leg and a retracement, and the pullback holds. And then we get a leg right up to the target. Retracement to blue and climbing. And that sends us all the way up here. Now, there's two factors involved here. Number one, the S&P put in a new all-time historic high, plus 10 points, and then got rejected. But remember, this is Wednesday, this is Tuesday, this is Monday. So if you follow the red cursor, that high right there. Now, on the way up, as you look left, you got to expect each spot to be resistance till proven otherwise. Like right here. Once price hit this, see the drop? Okay. In this case, price just rallied right through them, because the S&P was on the verge of putting in a new all-time historic high, so that creates bullishness in the market. But keep in mind, you got a high, a lower high, a lower high, which ties right into this high. Now, on the Russell, the step line has already crossed, and where's price headed? To the BBC. Pullback held, the pullback held, the pullback held. Does that guarantee the pullback's going to hold this time? No. But it holds more often than it doesn't. Now, if the Russell doesn't hold, 22, right now, the BBC's at 22.17. Now, let price get down here. Let it get down to about 22.11 to 22.09 to 22.07. Go for the day. And then some. You only need 2 points. In Q, here's where we opened last night. Got blue and climbing overhead. And when blue and climbing gets directly above price, it becomes resistance because it's probably on its way to becoming red and falling. Takes us to the BBC. Notice these candles are all touching BBC, so pullback L. Red and falling became blue and climbing. Get a leg, get a retracement, get a leg, get a retracement, get a leg, get a retracement back to the zone. And then that took us to the long target. And then took us to the zone. Right at the time, the ES was hitting that all-time historic high and then reversing. The reason every day that I bring up the S&P daily chart is because wherever the S&P goes, the other indices are going to follow. Sometimes they'll get out in front, sometimes they'll lag behind. But at the end of the day, or session, or however, whatever measuring stick you use, The other indices will ultimately go where the S&P goes. So watch the Russell. If the Russell trades through the BBC, you might, or we're on the NQ now. If price, you see, we got support ×2 right here. If price trades through it, then watch bullish cross, this low. This is definitely an area for good support. Price get down here, 2180 to 2170. That's $200 per contract traded. Crude oil. Okay, this was the opening candle. Pulled up to the VBC. Dropped to the zone. Price drops to the zone. Expect support. When it rallies up to the zone, resistance. Resistance always sends the market looking for support, which sends the market looking for resistance, which sends the market looking for support, resistance to support. And where to find support? Right at the short target. Got a bounce. Got another bounce. Found resistance at the BBC. The pullback holds more often than it doesn't. Then we get a leg, then we get a retracement. And this was a red candle all the way down to this low right here. You see where this curve is? Where red turns up into blue? It's very important. Okay. So we had a red candle all the way down here, but by the time the 30-minute period was up, price was all the way back up here. It's at the BBC right now. So we're up against resistance, but we got support, blue and climbing, right below us. So what would I do in crude right now? Nothing. There isn't a trade here. Wait until you have a window of opportunity. Okay. When you become a member, you'll learn how to find windows of opportunity. That's the whole purpose of the logic alerts, is to teach you to read the chart so that you understand where it's safe to be in the water and not safe to be in the water. Remember when you were a kid and you had a picnic, as soon as you finished eating all that potato salad, you want to go jump back in the water, and mom said, oh no, you gotta wait 30 minutes. I don't know who came up with 30 minutes as the perfect time frame. Oh, you got to digest your food first before you get back in, whatever. I'm sure you lived through that too. All right, gold. So we opened last night, and we find resistance at the BBC. So the pull-up held, and the pull-up held. We drop to the zone, and we find support. It's what we expect till proven otherwise. That bounces up to resistance at the BBC, which then sends us all the way down to the short target, pretty much to the tick. Low of this candle was 27.6. So we overshot it by 4 ticks there. I'll try to do. So then we bounce back up to the BBC where we find resistance, and that sends us back to where? The short target. Now this low right here, it barely took out this low, but it took it out by just a little bit. This low was 23.4. This low was 22.8. Support sends us to resistance. Resistance sends us to support. Okay. So you got a little double bottom right there. So what's going to probably happen? Price is probably going to attempt to pull back to the BBC again. Now, it held, and 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 it held. And does that guarantee it's going to hold this time? No. In fact, as I said yesterday, odds makers in Vegas would say, it probably won't hold this time. Well, see, that's gambling. And our whole purpose is to take the gambling out of trading. We don't take a shot. You don't ever hear me talking about how much I won today. You win stuff at the county fair. The markets is where you come to earn a living. Resistance to support. To resistance to support. To resistance. Over and over again and again, every market. Silver is kind of flatlining today. It almost made it to the short target. Got down to 30, 43 and a half. The target was at 41. Buyers came in early. Drove us up to the BBC and what? Pullback held. 1, 2, 3 30-minute candles. Is it going to hold again? I don't know. I expect it to hold until it doesn't. If it holds, then we'll have trading opportunities on the downside. If it doesn't hold, that's potential resistance, that's potential resistance, that's potential resistance. The good news is you only need 2 pennies in silver to get your goal for the day. Okay? All right. After hitting 58.40, the ES is now trading 26.5. The previous all-time historic high was 58.30. When the market puts in a new all-time historic high, more often than not, you'll see a rejection. Now, yes, we overcame it by 10 points, but those 10 points evaporated pretty quick. Doesn't mean we couldn't run higher into the close today. We could. And we might. I'll never pretend to know what's going to happen next in the market because that's not possible. There's no indicator, no oscillator, no algorithm, not nothing, not nowhere. When God created Adam, he did not give him the ability to change the past or know the future. And that still holds true today. I know we got AI and all this kind of stuff. But guess what? There's too many factors involved in the markets. There's too many traders, both retail and institutional, all over the world. And an institutional trader, he might have a buy order in for 100 ES contracts, but he's starting to feel a little indigestion. And he wants to go to the drugstore and get some Pepto-Bismol. So he pulls that 100 contract buy order. Well, all the other traders, they don't know he's going to the drugstore because he's got indigestion. They think he's just found out something or figured something out that they don't know. Why else would anybody who wants to buy 100 contracts pull their order? So suddenly, they all fold. And the market tanks because one guy in Berlin had indigestion. It's called the butterfly principle. A butterfly flaps his wings in the Amazon, and you get a hurricane in North Carolina. I'm sure you've all heard that before. Okay? All right. I've had enough. How about you? You can keep messing around, or you can become a member. mytradingiq.com. Call us 949-42-EMINI. Email us support@cfrn.net. 9 out of 10 new traders will fail because they don't have anybody to teach them how to trade. Oh, they got all kinds of indicators and all kinds of oscillators and all kinds of cherry-picked videos and maybe even a room with a grumpy guru. 2 hours of live training every trading day. That's what we offer. Private, one-on-one mentoring. Strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Most people are going to tell you, well, you got to buy this course for the ES, and you got to buy this course for gold, and oh, you want to trade the Russell? Then we've got a course for that. Yeah. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. But see, if they told you that, they couldn't milk you again and again and again for whatever nonsense they're peddling. We're just transparent and upfront. This is how markets work. This is how we trade the markets. We do it right in front of you in live time, live in real time. And we do it around the clock. Every alert that goes out, logic or concierge, goes out well ahead of it being triggered. Or in the case of the CTA targets being hit, you have the information in advance. So anyway, we'd love to have you as a part of the family. But, you know, what we do and how we treat one another, maybe that's, not for everybody. I can't say. As a passport holder, you'll get the Logic 247 alerts. You'll get the concierge trade alerts. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. Wouldn't it be something if the new all-time historic high that we put in today sticks for a while, right at a weekly trading zone that was put out Monday morning? Would that make me some kind of genius, math wizard? Not at all. Now you'll never hear me speak of myself in those terms. Math's a universal language, and it never changes. I just hope you can see the evidence in that. Based on everything I've shown you today and everything I've shown you over the last 2,600 plus daily episodes. It's all about market structure and how price flows. You'll get those logic alerts, or you'll get the weekly zones Monday morning, 6:15, when you become a member. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And not only will you be able to attend the meetings going forward, but you'll have the keys to the vault, and you can watch all the previous workshops since going back to 2008, I think. Do you need to? No. Should you? I don't see why. But sometimes just knowing you can. I remember when I had no money, I wanted to buy everything. But once God blessed me and I came to my senses and I actually had some money, the compulsion to buy every shiny object just dissipated. Just the knowledge that if I wanted to, I could buy it. See, before I didn't have the money, so I would lay awake and kick the covers. I want it, I want it, I want it, like a little kid. Then, when I was in a position where I could basically buy whatever I wanted, not because I'm rich, I'm not. I learned early on that if I want to stay financially fluid, the best thing I can do with my money is give it away. That's why my wife and I built the orphanage back in 2000. I started out this broadcast talking about the fact that whatever we possess in this life on planet Earth, whether it's money or other assets or houses or cars or boats, They're not ours. Everything belongs to God. We're simply called to be His stewards. And we want to be good stewards. And it was so astonishing to me how that compulsion to buy shiny objects just, I didn't have to go through some 12-step program to get over the compulsion to buy stuff. Once I had the ability to buy it, I I thought it was cute and clever, but that doesn't mean I stopped buying everything. I mean, but before I wanted to buy everything. When Christ enters your life and you truly surrender who you are to Him and to who He created you to be, everything changes. Ball's in your court. Let's wrap it up with our good word for the day. Part 1, God is calling you. You better pick up the phone. Paul, a bondservant of Jesus Christ, called to be an apostle. Romans 1:1. God reached into a part of Paul's background that had been formed before he became a Christian. And he found some very useful things there. And they weren't all spiritual things. They were also academic and cultural. Even though Paul seemed unqualified because of his monumental hatred for Christians, his background actually qualified him in a very unique way. As a former Pharisee, he understood the scriptures and the mindset of those who would oppose him. And his former spiritual blindness gave him compassion for the lost. God used both the good and the bad experiences in Paul's life. And He can do the same for you. Think about it. When God looked for a man to be an early leader in His church, to write down the theology of His church, to debate religious leaders who argued against His church, to advance the cause of Christ in academic and social arenas, to carry the message all the way from the lowest person on the street to the throne of Caesar, God found a man who already had the necessary qualifications. And that man was Paul, famous for being a killer of Christians. Indeed, God does work in mysterious ways. Here's how God works. First, He seeks you out, then He prepares you, then He positions you, and then He empowers you to do what He knows you can do most effectively. And God's call is the only thing that will make you completely happy, although you don't always know that in advance. So, is God calling you? Is He preparing you? Is He positioning you? Is He about to empower you? Your highest level of joy and fulfillment in this life will come when you surrender to Him and say, "Yes, Lord." That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.